Yes guys, I'm back with another one, and I'm going to be looking at BTC, see what occurred yesterday, the little dump that we had on BTC. I'm going to go through dominance, total 2, total 3, others, and just generally have a little overview of the market, see where we are, see where we were past cycle, and also talk about, people FOMOing in at stupid areas because they think it's not going to retrace, and just generally look, see what's going on. So yeah, let's get straight into it, guys. So I'm on BTC, having a little look. So I'm on the weekly. These are the weekly trends that I can see where we are at the minute. But if we also get another trend and have a little look. So from the bottom of this to here, we've not retested this trend line again. So if I move that and we go from here and have a little look, you can see this is the trend with BTC. That down into here is not out of the question. It's really not. Just having a look, see if that's my point of control from this 8 months chop. I think it was February to September. Yeah, it was about 8 or 9 month chop that we had here. So this coming down into here is not a bad thing. And I do think when it does that, people are going to think it's game over. But for this to test this area, is not a bad thing at all. That really is not a bad situation. For us to do something different like this, and we slam through it, then that could play out. Wiping out this before we then move on. And that'll probably take a few years. I'm not saying that's going to happen instantly. Excuse me. But these markets tend to move quick. And as you can see where we are at the minute, let me just move that. Where we are at the minute, with this here is the point of control. This is where most trades are taking place. The next point of control is here. That's why we had so much chop. This here is a low volume node. That is a low volume node. And that there is an unfilled gap. An unfilled space. So we'll go back to the prior cycle, and I'm not saying it's going to play out exactly the same with these cycles, but in these markets, history tends to repeat itself. I'm just going to have a drink 1 minute. I had to get my coffee. So as you can see here, we had somewhat pretty similar. We didn't have an 8 month chop. We didn't even have an 8-month chop here. And a lot of people are thinking we're going to do price cycles. But if you go from the bottom of that cycle, say this was the bottom, and we go to the top, that was 609 days. So just shy of 2 years. Say around 1 year, 8 months. So if we go to here now, from the bottom, let me get rid of that. Say this is the bottom here, March 23. That there is 644 days. So we go back here from the bottom, March, to the top, 602 days. Not a lot of people are talking about that. But where I'm looking, if that were the bottom, even if we just go to March, say that were the bottom, we're already 665 days into the move. So people are saying, oh, we've waited all this time to come out the bear market, blah, blah, blah. But if you look at the bear market, that were only 483 days. That were only a year and a half in that bear. But you're going from the bottom here to there, you know, it's around 600 days. So it's about 2 years. So we had a year and a half of that, 2 years of that. So like I say, if we're looking at the same, we've had way over 2 years. From here, which is January 23, January 24, January 25, it's 2 years. And you generally get 2 years. You know, I'm not saying I'm not going to be stacking BTC, because I am going to be stacking BTC. But what a lot of people are not telling you is this. They're not telling you that we've already had our 2 year cycle. They're telling you it's going to continue through 2025. But if that continues through 2025, from here, and we go into the bear here, what's that? That's 3.5 years. Well, round it off to about 3 years. That's 3 years of a bull. Not a lot of people are talking about that. And what they're also not talking about is this bull may have already played out. That move from there to there is a 587% gain. That move from there to there is a 2,000% gain. And what you will see is most of these bulls, they're getting the gains are becoming smaller and smaller. So it wouldn't surprise me if we do drop into a bear. And I'm not saying we are gonna, but it wouldn't surprise me, because we've had a cycle, you know. And if we drop into a bear, we are potentially coming back into this zone here, in my opinion. So even looking here, and if we get a volume profile and we have a look how long we stayed outside that volume profile, we stayed outside it a while. We came all the way back down to retest the point of control. So if I remove that and have a look at this, that aligns up perfectly. And this cycle is slightly different. I do agree with people there, because you're getting like, you got America and you've got other countries that are actually buying Bitcoin as a reserve. So yeah, it probably is going to be different. But the market still will retrace at some point and everybody will panic. In this zone, this is where you want to be accumulating your BTC. Between your 56 and your 69k, you want to be accumulating your BTC. A lot of people are going to get FOMO and think, yeah, but what if it never comes down? So a lot of people probably bought here and here and here and here. I'm stacking orders all the way down. So you're DCAing in these. Even if it's just £50, £100. £100 there, £100 there, £100 there, £100 there, £100 there, £100 there, £100 there. You know, and you build it up, and then when it starts to do that, £100, £100, £100. And then all of a sudden, when we do go back into another bull, could be another 4 years, you've stacked Bitcoin. And you're going to make a lot of money when it does pop again. Because it will pop. But if you have a little look, you know, we are still going up. And we are still bullish in Bitcoin. That's my overall view. These gaps will get filled. You know, 90% of the time, if you have a little look, 90% of the gaps get filled. These gaps will get filled eventually. That's my thought on Bitcoin. Let's go to dominance. Well, we'll do total 3 first. Let's have a little look at total 3. And like I say, this market is, you know, a little bit different this time round. Total 3, high level of resistance there. We rejected it. For us to continue, or to move on in this bull, we need to see it stay above this zone. This zone is prior to stay above for us to continue in the bull. My personal opinion. I'm going to go into dominance because I know a lot of people, remember this is on the higher time frame, a lot of people were expecting this. What they're not seeing is, look how aggressive that moved. That moved January 18. That moved aggressively in 1,000 days. This move here, from here to here, was only a 58% move. And it wasn't as aggressive as that. So everybody thinks these big institutions coming in were a good thing for BTC, and you know they're going to pump BTC. No, what it did was it regulated BTC. So these moves, these aggressive moves, aren't going to be as often. They're still going to move aggressively, but it's not going to be as often as you think. So if you have a little look on the weekly, in dominance, let me just remove my drawings 1 minute and just close them out. Look at where we are in dominance. If we go in on chart patterns, up, down, up, slight pullback, 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 up, slight pullback. Dominance is still bullish. You can clearly see that. For us to even attempt to try and get down, you see this move here, and you see this move here. If that's market structure there, oh, if that there is your market structure, don't we need to break that structure in order to move altcoins? Don't we need to aggressively come through that structure and retest and then go? That's my personal thought on it. If we're looking at market structure, and I've done this a long time now, so I know when I can see an aggressive move or not. This move might not be over, and alts are going to get rinsed. So I'd just be very careful with what you're doing. And then I'm also going to now drop into USDT dominance. I know a lot of the European countries are going to be banning USDT, and most of it's going to be priced in USDC or something along that, but we've only got the data that we can actually see at the minute. And at the minute, this data is telling me that USDT dominance looks like it's bottomed out. So if you're going on chart patterns again, I know a lot of people like to use chart patterns. So we've got 1, 2, 3. A triple bottom. 1, 2, 3. And then a push. So like I say, this staying here and then pushing to there is not off the cards either. My personal opinion. Another scenario is breaking this structure here and dropping and retesting. Then yeah, we can come and look at this structure here and take out this. Until then, be cautious, because this market is overheated. There's only one coin really. There's a couple. The main one, the big dog BTC, is in an uptrend. Altcoins, and I'll go show you that now. Altcoins are in a downtrend. Altcoins are in a downtrend. And they still are on the weekly. Cardano, at the minute, has hit this structure. This structure here is a big structure to break. Broke out of the downtrend, which it has. It's broken out of the downtrend. So if we had the downtrend, chop, back in, breaking out. You want to see that? The only thing that worries me is the USDT dominance and the BTC dominance, the way it is at the minute. For us to continue, a retest of this would be nice. You know, pricing it in. So, like I was saying, don't get FOMO in the market. I had a question of somebody earlier. I'm going to have a little look at it. Completely forgot what it was. Let me have a look. Sorry, that's my phone. I'll just try and find this question right quick. I see a lot of people as well, they don't want to cut the longs. Well, they don't want to cut the trades that are losing. I'll cut a trade if it's losing, I don't mind. If it goes, it goes. If it doesn't, it doesn't. So yeah. So we're going to have a little look at FOMO. FOMO in these markets. FOMO and over trading. So, you know, the fear of missing out is when a coin's done this and you can see the big move. They're not willing to wait for it to pop back into here. They think they're going to miss out. So here at 7828 was your long on Cardano. I'm just using this as an example. You know, it's not that I don't really trade this coin, but I'm using this as an example. So like I say, this here is a pop out. You want to see that. That's what we're looking at. If we've had the move. Like I say, a retest of that area would be nice. And then a move off. I'm not saying it's going to happen overnight, but that's what you're going to be looking at. And this is how you overcome FOMO. You go to your higher time frames. Use your higher time frames. They are the king. These higher time frames are the king. So if we're having a look at this, and even using your trends, let's get this set up. So that's your trend, your downtrend, sideways accumulation, which went on for 847 days. So that about 3 years. And now what we've had is, over the last 70 days, is it? Yeah, you had a 300% move. 70 days. We had that move. So now what you want to do is track that up move. So we're going to track that up move. That's how we're going to track the up move. But then we've also got to look at this. That's what we're looking at. You know, you're downtrending slightly, but you're also uptrending. So staying above would be perfect. Breaking above would be even better. And then there's also something else that I like to use. Is my simple moving averages. Let's get them on. Let's have a little look. So we've got our simple moving averages here. We've got the 200 there. See how it came back in and retested it perfectly? Absolutely beautifully. 20 and your 50 are below. So by the time these get up to here, and that starts coming under, that's probably going to be your retest. So I'd seriously keep an eye on these. And it's the same with most others. You know, I've got others here. Have a little look. There's your monthly trend. Stood above it. So we're okay. Supply zone, demand zone, tag, pump. Your SMAs are below. Excuse me. Then we've got dominance. Dominance, in effect, is still in an uptrend. Oh, we did it again. That's what we do on Jeff's videos. Dominance is still in an uptrend. You can clearly see it's still in an uptrend. You know, rejecting here would be perfect. Dropping down, and then we could end up tagging this zone here. That's what I'm looking at in dominance. And we want to see that for a run, really. I also want to say, not every coin follows BTC. So, I mean, like, some coins do their own thing. They don't automatically follow BTC. Some coins do their own thing. And you'll see that with a lot of coins. I'm trying to get an example of it. Let me just move these dailies and these and remove that. Right. So, XRP, 11th of November. Right. Now let's go to BTC. When I can get in there, 1 minute. And let's go to the 11th of November on BTC. So the 11th of November, XRP did exactly the same as BTC. Bitcoin Cash probably did exactly the same as well. It did, and it fell hard. But looking at most of these coins, like Band, for a fine example, this is a range that we're in at the minute on the weekly. And like I said, it's mainly a lot of the new coins that don't follow BTC's motion. You know, if you're having a little look at Band here, when we're at 9th of December, outside the point of control, all the way back in to the POC. So it's above the value area high, all the way back down. Back inside that point of control. So we had your push from your low. See, when it's trading here in your low, that's like 161 days. And then it eventually pops out, tests the high, drops in. Pops out, tests the high, drops back in. And this happens over and over and over again. Consistently happens in markets. It comes out, it drops in. Test the low, test the point of control, out, back in. You see that a lot in these markets. There were only one exception in these moves here. But I can't get a volume profile on here. Let me see if I can. See if I can get this one. Yeah. Right. So it comes out. Test the high. Back down. Test the low. Chop. Out. Back in. Did not test. So we're a failed test. Back out. Eventually popped back in. And that's what these markets do. You know, they're pricing in. They're trying to find the actual price of the coin to see where this coin could go. It's a lot different on smaller time frames if you're scalping, because you're in and out. It's a fast move. But this is why I'm a trader that uses the higher time frames, because I like the higher time frames. The higher time frames are me. I love the higher time frames, and I always will. So theta, let's have a little look. So if we're having a little look at theta, popped out of the value area, chop, back in, test, back out, back in. That's all they do. Look, out, in, out, in, out, in. It's what they do. This is why a volume profile is beautiful to actually see. And you'll see with most of these coins, they come down, they test the lows and pop off. They come down, they test the point of control, pop off. That's what happens in these markets. Failing to come back in to test could see a move if we stay outside of a pump up into these zones. That's all they do. I'll do another coin. Same with what's happening here with PP, Pepe, PP, whatever you want to call it. Comes back in, goes out, back in, out, back in, out, back in, and that's all it does. That's why if you can trade a ranging market, you're a very good trader. A trending market is easy to trade. It's very easy to trade. A ranging market is a whole nother story, believe me. And I can trade any market. You know, that's just, I've come to that point where I've traded that much that I can trade any market. This is a long that I've got set up in LTC. If we get back into this zone, then I will take a long. I'm going to have a little look at the volume profile on LTC. If you have a little look here, this could actually come back down in. If it comes into here, I'll reevaluate that long. I will reevaluate it for the simple fact, if it comes in and it rejects, we are potentially coming back down into here. If we hold and these catch up, then we could see another explosive move. But until then, I will evaluate this trade. I will not just go long because it looks like it should go long. I will evaluate and see. AVE, another great coin. Remove that fib. If you have a look at AVE at the minute, we're well outside the value area at the minute. We're well outside it. And we came up and we tested this next value area here. So only really one of the coins that are following BTC, you know, properly. And then we've got SUI. I'm going to have a little look at SUI. SUI, whatever you want to call it. SUI at the minute, if you look at SUI, this is its point of control. And it did exactly the same. Popped up, hit the point of control, tested the value area low, popped up, went above the value area, the point of control, came back in, tested the point of control, popped off, we're outside the value area at the minute. I know there's a lot of people like, I see them in groups and things like that, and they're like, oh, so he's definitely going at $20. How do they know? They don't. They don't know. And I'm not saying I do know. But failing to stay outside and we come into here, we are potentially testing that again. And possibly coming back into here if we fail to break that. That's why volume profiles are my go-to. I love volume profiles. You know, and you can use your trend lines, you can use things like that, horizontal lines, daily levels, we've got them. See how that daily level aligns perfectly with the point of control. That's your weekly trend. It's a steep trend. You got weekly levels, another one aligning with the point of control, another one aligning with the value area low. You've got your ribbons pointing up, you know. It's really not difficult to do, and this is why if you're a new trader, I would suggest starting on your higher time frames. You know, generally what I'll do is I do start on the monthly most of the time, and I will look at the monthly, and then I'll go down into the weekly, and then I'll go down into the daily and having a look at the daily. You know, I also use fair value gaps, and we've got a major fair value gap at $2.04 in SUI, what we've not come into. I'm not saying we are going to come into it, but I'm just planning for that scenario if we do come into it. And then to take my trade, I'll drop into the 4 hour and I'll have a look at the 4 hour to see what's occurring on the 4 hour. So short in SUI might be on the cards if we can get back into here. If we break that fair value gap, excuse me, and we retest, chop in here, we potentially come into there. You know, I'm not saying we're going to come all the way down into here, but the likelihood of that happening is high, especially the way BTC is trending at the minute. You know, like say BTC is back at the point of control. It came outside the value area, come back in, tested the point of control. At the minute, where we are, personally for me, I'm in a no trade zone. I'm in a zero trade zone. So I won't trade. I'm going to have a little look at the dollar as well. And if you have a look at the dollar, I can't remember who it was, but there was somebody saying, you know, the dollar's probably going to drop here. But just using candles alone, look at these candles here. Just let's evaluate these candles here. Just these 3 candles. So if we're evaluating these 3 candles, and that's a bullish candle, that is a doji candle. But did that candle there break that candle? No, it didn't. Like here, another fine example. That candle there were a bearish big boy. The next candle, so that was the 19th, that was the 26th. The next candle that popped in did not break that high. You can see that it didn't break the high of that candle. It then fell slowly, and it was 1, 2, 3, 4 week to take out this low end liquidity in this candle. The next candle on the 30th of September, the weekly candle, was a nearly 3% candle. The next candle on the weekly was a small bearish candle. I forgot what they call them. I know the top ones are a spinning top, something like that, but I don't really like to use that because, you know, just actually looking at the candles themselves, I prefer doing that. So just evaluating this candle here, bullish candle, doji. Did it break that? Did it break that low, that weekly candle there on the 25th of November? No. So why would we be attempting to short there? There's no reason to short there. The next candle is a weak candle, but we're in an uptrending slope at the same time. This candle never broke. This candle, but we're in a bullish fair value gap also. We never fell below that. Something like this and then that, yeah, that would have worked. But it didn't, because we never fell below that fair value gap. So I'm just trying to give you an example on the traditional markets. I'm going to have a little look at the S&P 500. So let's have a look at this. The S&P 500, this video is going to be a little bit long, my apologies, but I just want to show you. So the S&P 500 at the minute, we're in an uptrend. Even here, if you have just analyse this price action at the minute. There's your structure, we broke it, we dropped, we tested it, we dropped. We broke away here from that structure. We fell into another structure, we dropped. We then eventually broke away from that structure here, tested it slightly here, and then pushed off again. Same here. Structure creating, down, test, off. Structure test. Are we going to do something similar here? Is the S&P 500 going to test that structure before taking off again? Or is the S&P going to break that structure, test, and then come down to test this structure? These are just a few little tricks I'm giving you about trading, so keep an eye on that. My next video, because I'm going to get off now because it's a fairly long video this, my next video, what I'm going to be doing is I'm going to show you some altcoins, see if we can get some good entries on altcoins for your spot bags. Like I say, I've already told you about BTC and what I'm going to be doing with that. I'm going to be slowly DCAing in on the way down, building a big bag up. I'm also going to be doing the same with the S&P 500. I'm going to be building a bag for this. If we test this structure here, I'll build a bag. We test this structure here, I'll build a bag. We test this, I build a bag. And that's what I do. I'm going to build bags for my overall long-term gain for these markets. That's what I will do. And like I say, it's not going to be uncommon if you just have a little look here at the structure test here. It's not uncommon that this could do that and then start to go again. And that might take a while. So think about it before you're jumping into trades. So anyways, I'm going to get off. And don't forget, we've got links, CWP links. We've got the premium link in the description. Andre's trading journal, my trading journal, Mr. B's trading journal in the CWP premium. We've got a free chat in CWP as well that you can join. We've got James's baccarat indicators, absolutely fantastic. This is one of his indicators here, great indicator, money flow indicator. We've got Slim's bots, which are always printing. So come and check us out in CWP premium, see what you think. Come join the free chat, and then you can decide where you want to go with that. I've also got a link for buying me a coffee if you enjoy my content. You know, it keeps me motivated. Don't forget to like, comment, subscribe. And yeah, I will catch you in the next one, guys. Happy trading.